Hello everyone, welcome to CryptoPi. In today's video, I want to address the question, when will the bear market end? Alright, so as usual, we have here 200-week moving average and Bitcoin price action in its USD pair. And the first thing I want to start with is basically breaking down the Bitcoin in 4-year cycles. The way we have done it is by marking accumulation lines and the distribution lines. For people who are new, the distribution lines are marked as the time when the Bitcoin price crosses the distribution line. It is basically the end of the bull market. We do not see a new all-time high once the price has crossed distribution line until Bitcoin crosses the accumulation line again, and that's when the new bull cycle or the new cycle begins. What usually happens is after the price crosses the distribution line, we do see some rallies once in a while during this period. Then when the price has crossed the accumulation line, we see kind of a drop of 25%, sometimes 35%. After the drop has happened, Bitcoin price action goes sideways. We can call it as an accumulation period. And that marks as the beginning of the next cycle. Bitcoin starts going an uptrend for the next 3 years until the cycle repeats. Then we have 1 year of bear market. Then we have again the cycle of bull run. And now we are in the year of bear market. Now, to add a bit more to the analysis, we also mark the pre-election years. That is basically the start of the year after the bear market. And the period when between the accumulation line and the start of the pre-election year is usually the interval where Bitcoin bottoms out. If we look at the price in the past years, excluding the really first rally in 2011, since the price action was not very mature in my opinion. So considering the price action from 2014, in this year, we see that the Bitcoin price bottomed between the accumulation line and pre-election year. Over here, the lines are switched, but if we look at the absolutes, it's still between these two lines. The time interval is still valid. And this was the Bitcoin bottom. One might say this was the bottom, but if you look at the price close, then this is the bottom. In the year of 2018, we see accumulation line was on 12th November, in the week of 12th November. Then we saw a drop of approximately 50%. And price stayed after the drop for a while in that range until it crossed pre-election year line. And then we started seeing some bullish momentum developing in Bitcoin's price action. It's a similar story in the year of 2022 that we saw a drop of approximately, from the accumulation line, we saw a drop of approximately 20%. And price stayed sideways until the last week of 2022. And the bullish momentum began in the first week of January, or you can say in the second week of January. It's very close. So why not? What is the reason that Bitcoin price will do the same thing in this cycle? We do have a lot of macro factors, what ETFs, companies buying Bitcoin, banks buying Bitcoin, countries buying Bitcoin. But I would say those narratives were already there since 2018. When we were here at the top, there were news which were about, all right, now this country is buying some Bitcoin. Banks will soon offer Bitcoin as the asset. Similar stories here. Companies are buying Bitcoin. We will have ETFs. ETFs are not new. There were already ETFs over here. And here today we have more ETFs. So in last year there were more ETFs. But that did not help Bitcoin to stay in this region. Despite all the money flowing in ETFs, we still saw price dropping. Right now it is, from its all-time high, it is almost 40% down. So if we look at the pattern, what Bitcoin has done historically, there is a pretty good chance that Bitcoin will continue its journey in this region, but there is a possibility of a drop. It could be like this, or it might drop, go sideways, and then make another small drop until this range. This price somehow sits with the estimation which we did in previous videos, where we talked about the rise in the bottom. What we did was we calculated how much the bottom rose from first cycle to the second cycle, or the first bottom to the second bottom, from second to the third. And here the bottom rose by 8,000%, here by 1,828%, here by 295%. And the goal was to identify by how much the bottom will rise from this one to the one which is upcoming. To do that, we took ratio of the gains. So that's why we call it bottom gain factor. We took the ratio of the gains, so 8,000 divided by 1828, we got 4.9, 1828 divided by 395, we got 4.6. And now we want to know what will be divided by 395 and what will we get. So we got value of X as 83%. So bottom would gain by 83%. And that brings us to this range of 29,600 or something like that. If I click to be more exact, it gives us 28,400. But at the same time, we said, looking at some price action theory, we have here the breakout structure, and we have a fair value gap over here. If you mark it here, we get it at 34. Now, combining this to analysis with our accumulation and distribution lines, to me, it seems somewhere in this, let's give some more flexibility to the price. I would mark it somewhere between this two range. So I might, let's say, removing this one, keeping it above the breakout structure. That brings us between the value of 31,000 and 38. And why 38? Because here we have another sweep of liquidity, and this could be the range where price could bottom. It could be a very brief price action there, so price might stay like this way for some time, just for a week, and then start going back up like that. The current rally brings some bullish momentum, but I want to show very briefly another indicator, which is Indian oscillator. And if we see at historical prices, the oscillator shows us the bearish momentum, which is in red, and bullish momentum, which is in blue. The bearish momentum has always been above the bullish momentum during the time period where price action is between the distribution line and the accumulation line. We do see some rallies, but those rallies are not sufficient to have the bullish component gain strength against the bearish component. Over here, we saw this rally in the year of 2022. You can see a small drop in the bullish component, some rise in the bearish, a small drop in the bearish component and some rise in the bullish component. But eventually, the bearish component gains strength against the bullish component. It's the same story here. We do see some weakening of the bearish component and some strength in the bullish component, but it is unlikely that bullish component will jump from 1900 above 23,000. It only happens when the bearish component over the long period starts losing momentum, and over the long period means for weeks and months. And that usually happens only after the price has crossed accumulation line. You see, bearish component is losing the momentum. It went below the signal line, which is the orange, and that happens in the period after the price has crossed accumulation line. Look over here, this one. Here it already started in a very early phase, but the real drop when the bullish component also started gaining momentum and bearish component continued to drop was after the price crossed the accumulation line. Over here, it was delayed. So that's why we had a very long accumulation period. But as the market matured, we start seeing the pattern converging, where the bearish component loses strength after the price has crossed the accumulation line. I think that would be all for today's analysis. I hope it gives you some idea of when the price will bottom, when the bear market is likely to end. If you like the analysis, then do hit the subscribe button. I will see you in the next one. Bye-bye.